Good morning and welcome back to another episode of Weekly Review of Indian Equity Markets. Uh, as we deep dive into this week's market activity, let me start with standard disclaimer. I'm not a SEBI registered investment advisor. I'm not suggesting or I'm not showing charts from a trading point of view. I'm just trying to analyze the weekly market activity uh, and also to kind of keep a track and record my thought process as the market action plays out. This is purely from my own educational purpose, and if it can benefit anyone, everyone is most welcome to do so. Uh, and now let's get into the review. And before that, let me wish you all a very happy Diwali. May this year bring a lot of joy, success, and good health to each one of you. So with that, let's get into the weekly review of the markets. Let's start with Nifty. The chart that you see on the screen is Nifty. So Nifty for the week has printed a okay kind of candle, but more importantly, I think the first leg of resistance has been able to breach, though the size and shape of the candle could have been much better, but nevertheless it's a decent candle to work with. Having said that, I think on a daily time frame, if you see the chart for the day on a daily time frame, right, we started off with a mild gap and we held on to that gap, and as you would have seen that the open and close are not very far away, so this is how it gets reflected. So we tried to move higher or take or build on to the momentum, but I think the sellers dominated in 2 3 days time, and in 2 out of these 5 days, and then we kind of saw some bit of pushback happening. So we are pretty much within a range, and and closer to now, much closer to 50 DMA. A breach of 50 DMA and a move up can have a meaningful impact on the market. So this is a resistance line we had marked out, and we wanted to look at what is happening to the market at this resistance line. So let's see. It's early days for the market, but yeah, I think from the point of view of buyers, I definitely see a positive tone in the market, especially in a couple of indices which have done exceptionally well in this market in this week. We'll see those indices as well. But to start with, I think Nifty has printed a okay kind of candle. I'm not very positive about Nifty candle specifically because the candle strength of the candle is not as good as it should have been, uh, and it is definitely not as good as you would see what has happened in Bank Nifty. So let me redraw this line. So this is where Nifty has the first level of resistance, and it has to take out this resistance with good wide range candle, and we will then kind of review as to what is happening in the market. So this is to do with Nifty on a weekly and daily basis. We will not go down to lower time frame in Nifty because right now there's not much to see. Now compare Bank Nifty chart to Nifty. I think Bank Nifty is printed much better candle, though the body of the candle is still very small. But if you see, while Nifty was yet to take out this wide range candle, Bank Nifty's already tried to do that and closed right at that wide range candle, and in the process it has where is the 50D? It is now closer to 50-day moving average. If Bank Nifty has to lead the charge again, I think first thing it has to do is it has to print a wide range candle here and take out the 50-day moving average, and then this would be the next point of resistance. But having said that, I think once it takes out the 50 DMA with strength, right, this is where the resistance points are. If you look at the chart, so I think it's been able to do some bit of positive up move, but we are still below 50 DMA, and we have to take out the 50 DMA. And if it takes out 50 DMA, I think there is no harm in trying to attempt a trade at 50 DMA with stop loss nearly say 0.5% below the trading. Depends on the way candle prints, but if it consolidates here and then takes out wide range candle, it would mean that we can work with a stop loss at 43 450 and try and see as to what happens in the market, right? So this is what Bank Nifty has done. So both Nifty and Bank Nifty, it's advantage Bank Nifty. But within Bank Nifty, I think what is interesting to note is that the major contributors of Bank Nifty for the week were actually mid and small cap banks, or the second half of the Bank Nifty stocks, not the premier ones. So if you look at ICICI, right, so Bank Nifty had printed a positive 1.5% candle, I guess, 1.76, 1.5%. Let me just try and put that up, put that back again. Nifty Bank. Okay, let me just get it here. Bank Nifty. On a weekly time frame, it had printed 1.16% candle. But if you look at the stocks within the Bank Nifty, if you look at the leaders of the Bank Nifty, so ICICI is still negative, Kotak is still negative. Kotak is just about 0.7% positive, but there's the way Kotak has not done anything for such a long period. There's no point in looking at Kotak as the flag bearer. Indus has done well, and if you see, it has broken out of the base it was forming once again, which is very positive sign. But you look at, so four banks will focus on ICICI, HDFC Bank negative for the week, State Bank of India negative for the week, ICICI Bank negative for the week, Kotak Bank positive, Axis Bank is positive and positive by a mile. So this is the driver, right? Now look at Federal Bank. Federal Bank is another 4%, right? And structure of Federal Bank is definitely in good shape, much better than a lot of other banks at this point of time. But it's been a laggard. This entire rally, Federal Bank did participate. So Bank of Baroda is negative. Axis Bank we've seen. Punjab National Bank is a smaller bank. The weight is not much. So if you see, the texture of the market is still being driven by the second rung banks, not the premier banks. And unless the premier banks chip in, Bank Nifty's move would always be skeptical, or I would always be skeptical of the move in Bank Nifty. So someone has to take the lead, whether it is ICC. So Axis has taken the lead. Someone else has to join this party. So whether it has to be ICICI or HDFC, which has to, or SBI. One of the three have to join the uh, positive momentum or positive note and start delivering from Bank Nifty, or else Bank Nifty may continue to face trouble. So we've seen Nifty, Bank Nifty. One pocket which is which has been showing exceptional strength for a long while now is, let us see, broad indices. So let's look at auto stocks. See, auto for the week has closed positive 1%, but look at what has happened to auto over last few weeks, right? While most of the indices have fallen, so Nifty corrected by close to 7%, Bank Nifty corrected close to 10% plus. Uh, you look at what has happened to to auto indices. There's hardly any correction that you see. So this is where Bank Nifty topped out, and if you, so yeah, close to, on a closing basis, you can take 8.5% correction in Bank Nifty. Compare that with Nifty Auto, you would hardly see any correction. In the cycle, where was the bottom? So let's take this as the bottom, 4%. So auto obviously is outperforming, and it's outperforming by a mile when it comes to both Nifty and Bank Nifty, and which is which is huge. Look at the way rally. Look at the rally in autos. It just continued to kind of keep moving up. So this was the opportunity to build something into auto, and see where it kind of took support. So autos are definitely in a great shape, and they are doing exceptionally well. Let's not look at service first. Now let's come back to Nifty. Nifty Finance is something that we have not seen properly. Leave this aside. The Nifty Finance structure is similar to Bank Nifty, but it's yet to take out the larger downward pressure candle, and it's just about taken off the resistance it was facing, or the long term resistance that we can call this level as a long term resistance, and it's yet to take it off. But yeah, structure wise, it is again like Bank Nifty, nothing special, right? Now let's come to IT, FMCG, and look at IT structure. IT is consolidated, tried to break out, is consolidating here, right? So this is not bad at all, in my view. It is not bad because from a valuation perspective, things are in your favor. You look at what is happening in US markets. I think at some point of time, sooner than later, you'll see a rub-off effect in Indian IT sector as well, and you'll see a significant uh, part of move then panning out. One good thing is we've not breached 50 DMA. Let's see, did we breach? Yeah, we did breach 50 DMA. The drop has been decent. I won't say it was not bad. Uh, the drop has been, yeah, it was 10% drop, which is actually a painful one. Yeah, the drop has not been good. But having said that, if you see the long-term structure, it is, if this were to be the pivot here, then we are forming a nice higher low. We have made a higher high. We made a higher low at this point of time. If this pivot gets respected, then we are definitely in a higher low, and then from there we take it forward. So Nifty IT is in a good structure. FMCG is doing right things. It's been consolidating, and it's been consolidating in the zone for a while now. So it can offer good risk to reward. You see the when FMCG moves, it moves in phases, right? So this phase is again a painful one, but from here we have moved up significantly higher. Look at the amount of rally we are seeing in FMCG, 35% rally. This is stupendous. So FMCG move comes in a seasonal manner or in a cycle fashion. So let us see now when this breakout happens here. If the you see this breakout, right? Now, if the breakout happens here, does it have the ability to deliver another 30-40%, which is good? Let's see from this breakout what kind of returns we saw in what kind of time frame. We saw 24% return from in a year's time, which is very good, considering the fact that it's a very stable kind of index, and it's a defensive index. It's a great thing. Now let's come back to something which is doing exceptionally well. So pharma had a good vertical up move. Then we have been consolidating in a flag structure, and now we are seeing some element of flag breakout, and this is one of the best performing index for the week with 4%, and we are just about at the flag. So do we consolidate here further, or do we continue to move up? All said and done, I think pharma is in a very good structure, and it definitely, I already had been indicating that pharma is in a good structure for a while now. So certain stocks within pharma sector are doing exceptionally well. So one should definitely keep an eye on it. So we covered FMCG, we covered pharma, auto. Metal is a index where there are some positions that I had built, and they are yet to show any meaningful pickup. So this is the long-term structure of metal index, and we are definitely forming a decent contraction within this structure. This would be more like it. Yeah. So this is a classic Minavini classic cup and handle, O'Neill cup and handle, which is playing out here. And if we were to break out from here, it's going to be really nice. And look at the let's look at the moving averages. I think it's not done badly. It just kind of corrected, and then we are moving up, but we are moving up on back of small candles. So nothing positive. At the same time, we remain optimistic about possibilities of Nifty metal. Now let's look at the global markets. What's happening in the global indices, and it's something really interesting is happening in global indices. Okay, before that, I think we are yet to cover the mid and small cap. So Nifty 500, which is a indicator of broad market health, has printed a positive candle, and look at the way it has taken out the wide range candle negative push that we had seen a couple of weeks back, and it's taken out that candle. So which means what? The bottom 20% of the market is doing much better than the top 20%, top 80%. And why do I say so? Because if you were to look at the composition of Nifty 500, 75-80% of the index weight of Nifty 500 comes from the large cap holding, and remaining 25, 20, 23, 24% comes in from the mid small cap holding. And if you were to see, Nifty is yet to take out this wide range candle, whereas in case of 500, we have already taken out this candle, which means that mid, small, and micro caps are doing exceptionally well. Micro cap we'll leave aside, but mid and small cap are doing exceedingly well. Let us see if we have mid, small 400. Yeah. So this is what is driving the CNX 500 performance. So when you see mid, small cap 400, this is what has taken out the Nifty. Let's do a compare. I think we'll have to go to hourly candle and see. So green one is mid small cap, and this is 500. Now let us look at. Let me take this out and let me see if I can get Nifty. Let's. Yeah. Okay. This is a better way of seeing this, right? So we've already taken out the previous high, whereas here we are still some distance to go. And if you were to kind of plot it, right? So this is how you see the outperformance. Uh, let's get back. Let's not spend more time here. because let's not make this a very long video. Let's get back to our candles. So we were talking about performance of CNX 500. Now let's look at CNX 250, mid small cap 250 and mid cap. So let's look at mid cap 150. Sorry, I just got distracted by trying to make the so mid cap 150. If you see again, the structure is similar to CNX 500, and now let's come to small cap 250. And if you see small cap 250 is even better. And let's look at micro cap 250, just like small cap. I think net the point that we are trying to highlight here is the buying pressure and the entire buying momentum is coming from in select pockets, whereas the broad market is yet to kind of see that kind of positivity rubbing in, especially the frontliners. So, so what do we do at this point of time? I think these are classic. It is clearly showing a two parts of market, which is one side of the market which is struggling and which is still struggling a lot. And if you were to correlate it with the FII data as well, if you see FIIs have been consistently selling for the entire month of November, so it's clearly a market which has got divided or which has got split into two. The problem is you cannot be aggressive in this kind of market because unless there's a overall buying pressure showing up, this SIP inflows and all that, which typically are now coming into mid, small, and micro cap stocks, right, can actually take a big knock whenever there is a big selling, right. So we have to be cognizant because the entire 2 weeks of hard work can just get watered down by this kind of candle, and we there's no follow through specific to this candle. But if you see, the follow throughs can be really disastrous. With this kind of follow through, at any point of time, it can come in. You have to be careful, but this is printing a higher high now, which means which one were to see, it is showing a probability and possibility of more firepower in these stocks. And fortunately for our markets, US market has turned supportive. So let's look at the global indices and see what is happening in those markets. So we'll start with SPX. Right? So we had marked out this downward trending line on a weekly basis. Let's see on a daily basis what we did. We've just moved about 50 DMA, and we've moved with a good wide range candle. It definitely calls for trying out possibly some building some position. There's this gap region here. Let's see if we can take out this gap. If Yeah, we have just about taken out this gap. We have taken out this resistance zone as well. So I think 30% deployment can happen into this kind of structure. This is much better. You look at the way it has just come out, and it's roaring higher. She's taken out most of the resistance points that we had drawn out. It tested out this range. If we see, do we have a support at this place? So after a 4-5% up move last week, we are again seeing a follow through week, and we are seeing a very decent follow through week. So if you see, this can again be seen like a variant of some kind of variation of cup and handle. We saw that in some other index as well. That was something that we were trying to make. I think it was the case with metal index. Yeah, I think metal. So it's forming a variant of cup and handle, and it looks very positive. The structure is very positive. SPX was positive again. The week closed on a positive 1%. Nasdaq closed positive 2.5%. Oil has started consolidating. It's taken out this resistance, and it started consolidating and seen some bit of correction over last couple of weeks. We formed a long tail here, and let's see if we can form a if you're forming a nice structure like this and then have the ability to take it out. Uh, One structure which is looking little worrisome is INR, dollar INR pair. This is not looking good. This definitely is a point to make note of. This is forming nice contractions. If we consolidate and break out from here, I think 3-4% can come in no time. You look at this consolidation, we are akin to this kind of consolidation. Yeah. So this is broadly how the markets have played out this week. There are a few stocks which have done exceptionally well in this week, especially mid and small cap. Let's just quickly glance through what has happened in US market. So Meta is breaking out of a flag. Meta has actually moved 300% in no time. People didn't even notice this kind of move as wanting to move up again. Microsoft, clear breakout and a beautiful structure, long-term structure. It definitely calls for participation. It definitely calls for participation, and we should build some positions out there. Sorry. Uh, with Obviously you have to check with your registered investment advisor or your advisor as to what he would want to do. So a lot of US stocks are doing exceptionally well, and especially the IT sector. So just keep a tab of that, and which is exactly what I was alluding to when I was doing a review of Indian IT structure, IT index. I think the if US market starts doing well, and especially IT, a lot of that rub-off effect you'll start seeing in Indian market sooner than later. And I think the way US market is moving, it definitely calls for having a closer look at what is happening in Indian IT markets. So broadly, this is what I wanted to cover for the week. There are obviously a lot of good solid structures. So healthcare is something that we didn't cover, and it's not there in my healthcare. Yeah. So look at the way healthcare is broken out. So within Indian markets, pharma and healthcare are in an exceptionally strong space, and they are clearly asking you to take a much closer look than what you would have done. So look at the way actually healthcare has consolidated in this zone over last few years, and it has broken out. So even if one were to start building position, sorry, start looking out things here, we're talking about 12%, which is not much when you look at CPC and all that. So I think it definitely calls for having a closer look at it. I'm sorry, I'm not asking you to build positions and all that. Just have a closer look. Talk to your financial advisor and see what you want to, how you want to go about it, or do asset allocation if you want to do some allocation here. And from a really long-term perspective, also it's broken out. Taken support here. It's broken out. So resistance is turned into support, and then we are moving higher. So with that, I'll close this session, and it was really a good session from an Indian market perspective, especially mid and small cap. As I said, we are clearly split into two parts. The market is split into two parts: the larger caps, which are trying to make a move, but the smaller caps, which are still running and running sharp, running fast. So with that, just keep an eye. This is not a market for over allocation or blind allocation. This is a market to be very nimble and be cautious of what exactly is happening and which part of the market is moving. Uh, there are certain pockets which are definitely calling for you to have a much closer look at them as compared to the broad market. So with that, I'll end this week. Have a great Diwali. Uh, I am looking forward to catching up once again next week. Thank you so much. Have a wonderful day.